Greetings from cold Rhode Island. It's about 30 degrees out, and hope you're warm and safe wherever you happen to be. So, in today's live stream, I want to touch a little bit on what is infinite banking and why should you care, which actually this is the title of my ebook. And then I'm going to touch on ways to get started and some things you want to be aware of if you decide that you want to look into doing this for yourself, for your family, for your business, whatever the case might be. So first of all, what is infinite banking and why should you care? At its heart, infinite banking is just the term that Nelson Nash called it, this approach to personal wealth management. He just used that title and he needed to call it something, so he called it infinite banking, and thus was born the infinite banking concepts back in around 2000 or a little before then. He started teaching this concept. Really, at its heart, it's the use of very old school participating whole life insurance contracts for your benefit, that in a myriad number of ways. Obviously, there's a death benefit for protection for your loved ones, business partners, whatever the case might be. But there's so much more to it than that. And it's really a financial strategy that allows you to free yourself either fully or to some degree from just the way things are done. The typical, or I won't say traditional, but the typical way that things are done in the world of money and wealth. Obviously, the banks you almost come out of the womb, and the banks just, when you're of age, you start to put your money into a bank and run your money through there. It's just how it's done, and most people don't think there's any alternative to that. And infinite banking is just to let you know that there are alternatives to that. And there are benefits to running your money through these whole life insurance contracts instead of just using the banks for everything. And it's also about breaking free, and it's really about control in a lot of ways, because as convenient as banks are, and having your money flow through banks is convenient, and there's no question about it. How safe it is in there is up for debate. Some things that we think are super safe about banks really aren't, especially when things go sideways and things don't go so well. Some of the protections are not nearly as potent as you might think. So it's really about taking charge of your financial future, growing your wealth over time, and taking advantage of the savings and liquidity strategy that actually is very powerful, unlike most savings strategies, which is maybe sticking under your cash under the mattress or having a low interest savings account in a bank. So some of the challenges that people have when they start, they hear about this thing, it seems like a good idea, they're not sure where to start. A lot of times people, they'll jump in without fully understanding it, or they'll partner with someone or some financial professional who claims to know what infinite banking is and really doesn't, or doesn't know how to do it the right way and doesn't set them up in the right kind of policy. And you have to have it requires a certain discipline. Obviously, it requires a certain amount of disposable income that you're going to use for this strategy. It's not for everybody. If there's more money going away from you than coming in, it won't work. Very simple. You have to have more coming in than is going out in the way of expenses. So that's one challenge that people have. It's just some people, they won't qualify for it simply. Some people, won't have the discipline or the sort of intestinal fortitude to make these things work. It's not complicated, but you have to do it the right way, and not in the famous term that Nelson used, steal the peas. There is a way that you can set these policies up, and then you start to withdraw or take you access the cash inside of them and not replenish it, and you can lose them. What's called lapsing, and that does happen sometimes. Where I've had clients, they won't be on top of it, and I can't be there, holding their hand the whole time. I do it as much as I can, and they'll mismanage it, and then it'll over time it can fall apart, which we don't want to have happen. So there are some challenges. It has to have the right mindset and the right discipline, and really the desire, I think, is really important. The desire to be in charge and be in control of your financial destiny, and then the wherewithal to just do what it takes, and to get the right kind of coaching throughout and leadership on how to do it the right way, with people who are doing it for themselves and who are qualified to teach you how to do it. So have you ever felt like your financial options are too limited? Usually people, if they answer yes to that, they'll think, well, you have a 401k, maybe you have one through work or something, and that has very limited access throughout the life of the 401 program. And also it's a retirement thing, and it's setting aside money for some future, that retirement age. And infinite banking is not about that. In fact, I very rarely talk about retirement when I'm talking with my clients, or even in my own head. That's just a construct. Really, it's just something that was labeled a long time ago, and you don't have to necessarily. It's important to allow for that, but you also have to account for what's going on right now and what your financial needs are right now, not just 20, 30 years down the road. So that's kind of in a nutshell what infinite banking is. And it's just using a certain type of whole life insurance contract as a savings and liquidity vehicle to finance the things that you need to throughout your life. Because everything in this life in our Western world is financed one way or the other. You either pay cash for it, or you borrow and leverage the banks or lending institutions to get the stuff that you need on a day-to-day basis. So second part, on 3 steps to really starting it safely and effectively, if you really want to get started on this thing called infinite banking concepts. You have to work with the right professional. We're not all created equal. The vast majority of financial professionals are brought up in the world of stock market related things. They get their series licenses, they become fiduciaries, whatever the case might be. And that's all well and good. But if that's all they focus on is what's called assets under management, and that is not what we're talking about with infinite banking. And this is really important. I've said this before in other videos. These whole life insurance contracts and infinite banking, it's not investment. It's a separate type of asset. It has nothing to do with investing. Now, you can have your whole life policies and tap into them for investments, whether it's cryptocurrency or real estate holdings, or even if you want to be in the stock market. But in and of themselves, they are not investments. That's really important to understand. So you need to work with people who know what they're doing. I don't deal with stocks and securities at all. So if someone comes to me and says, hey, I've got my IRAs in a certain fund, can you help me? I say, no, it's not my area of expertise. And I would direct them to someone who is in that world where they deal with securities, and maybe they could get them into some sort of a more appropriate type of fund, given their circumstances, their risk tolerance, and that kind of thing. That's not what I do. So if you're going to get into infinite banking, make sure that someone who, ideally is an authorized practitioner like myself through the Nelson Nash Institute. That's one thing I would definitely look for. Now, I know people. First person I was taught about this strategy is not an authorized practitioner. Now, he learned directly from Nelson Nash, who created infinite banking. He just chose not to become an authorized practitioner. He does it right. He knows how to do it. He's been doing it correctly for a long time for his clients. So there are some outliers. In general, if there are financial people out there saying that they do IBC and they're not an authorized practitioner, walk away, because the likelihood is that they just have taken that on as like another tool for their tool belt. Oh, I can do that too. If you've run across people who say, "Oh, I can do that, I can do that, I can do that, I can do that," head for the hills, because you can't. You can technically, legally have the licensing for it, but it doesn't mean you know how to do it, and it doesn't mean you know how to guide someone on how to do it correctly. So it's really important. The second step is you have to structure the policies the best way for your goals. And this isn't just life insurance. It is life insurance at its heart, but how you design it and set these policies up can be really tailored to what your needs are and what your goals are. So it's really important to keep that in mind. And also, I would be it kind of ties into the first part of this, the right professional. There are people out there claiming that this something called an IUL, an Index Universal Life Policy, is appropriate for infinite banking. It really isn't. You can kind of sort of make them work, but why would you use something that's not optimal when these whole life insurance contracts are the best thing for this approach? I've heard, I don't know for sure, but I've heard that agents make a higher commission if they sell a similar looking IUL versus a whole life insurance contract. So just be aware of that. If someone says they do IBC and they try to get you into an IUL, head for the hills or come talk to someone like me, because it's not appropriate for a wide variety of reasons. I'll probably do a live stream on the differences between those and why I only use whole life for this rather than these other universal life policies. There's specific reasons. I could certainly sell them IULs and universal life policies. I don't, because I'm an authorized IBC practitioner. So you have to understand the third one here is you have to understand the mechanics of policy loans. So when you create these whole life contracts, the way you access the cash value inside of them, is via policy loans rather than extracting it right out of the cash value. There are a number of reasons that we do that. It's then you're not tapping into the principal, so the cash value continues to grow guaranteed, regardless of whether you're taking loans out. It's non-taxable. Taking loans out from a financial firm is not taxable unless you mess it up, which you can do if you don't do it the right way. And you can go on YouTube and find examples of people talking about that. And it just, they screwed up. It wasn't that either the policy was not set up correctly or they screwed it up and they stole the peas. As I referenced it earlier, Nelson talked about stealing the peas as if you were if you owned a grocery store and you were the owner. If you continually just took food off the shelves and didn't pay for it because you're the owner, that's stealing the peas. And you can do that in these contracts too, where you just take loans out and you don't properly replenish it and it will fall apart. Just like a grocery store owner, if he kept doing that and kept just taking stuff off the shelves and not paying for it, eventually he's going to go out of business. It's a very similar kind of a thing. So you have to be mindful that, and I like to, when I talk to my clients, I say, really, when you start to get your first policy and you start taking your first loan out, you just want to take seriously that you're taking on another responsibility. You're taking on you're being a lender for yourself, and you have to treat it that way, almost like you're two different people, like Jekyll and Hyde. You're now being responsible lender of your money, and you're using it to this other part of yourself for whatever you need. And you, the lender part of you, would want the borrower to be responsible and get that money back in. Now, because you play both roles, you have complete control of how that looks, because these loans are never set up where you have to pay them back specifically like any typical loan from a bank. So they're unstructured loans. So you have complete control of it. But along with that comes a certain responsibility that you want to treat it seriously, and just so you don't muck up the whole thing, because it's just, you don't want to muck these things up. They really are like the golden goose. And as long as you nourish it and take care of it over time, these things just keep producing and just making your life a whole lot better, not just from a wealth building standpoint, but just from a peace of mind. And we all know how money can affect our relationships and all these kinds of things they're very much affected by our financial situation. So, so you have to just be really on top of it. That's all. And it's not hard. It's fairly simple. You just have to be responsible and get the right kind of coaching and mentoring. And that's why someone like myself, this is all about relationship. It's about setting up the right way and then taking you through the process ongoingly. So it's one of the, I wanted to, let's see, to close out here. Um, some other pitfalls that I want to touch on. It's not just the loan repayment. A lot of times you'll see out there in the YouTube and whatnot about harping on the loans, and that's important, but it's not the only thing. It's just a piece of the puzzle. And this is not a get rich quick strategy by any stretch of the imagination. This is a long-term approach to wealth building. Now, there are short-term benefits to it. I've talked about this before, where you have debt that you want to buy, and you set your policy up first, take loans out from your policies to satisfy your debt, and then because you're now the lender, you cycle that money back in, you start to use the same dollars over and over again. So there are short-term benefits, but this is a long-term thing. So that's another really important thing to keep in mind. So you always want to these are some of the things you want to make sure you do. I highly encourage any of you listening to look into it and learn more about it. There are lots of books to read. You can get my ebook. You can get Nelson's book, Becoming Your Own Banker. Educate yourself. It's all about education. And once you get to a point where you understand it enough and then you want to move forward, I encourage you to do so. It's a very powerful wealth building tool, not just for yourself, for your family, your kids, future generations. So I'll close out on that. If you feel free to reach out to me, you can message me through LinkedIn, go to my website, and happy to help. So with that, I'll say adieu and happy Friday, the 17th of January. Have a good weekend. See you.